multi-omic sequencing in the life science space, robotics, energy storage, artificial intelligence, and blockchain technology. So each of them is evolving, ready for prime time, ready to scale at growth rates that, depending on the technology, are anywhere from 20% to 50% per year. And what that means, and what will be so unexpected here, is that already strong growth rates will accelerate and we think create massive productivity gains and opportunities for wealth creation.
Throughout history, major technological advancements, such as the internet, have rapidly boosted economic growth. These disruptive innovations currently represent around 1/6 of the total value of global businesses and are expected to grow significantly. Investment management firm ARK Invest predicts that by 2030, disruptive innovation could account for as much as 60% of global business value, increasing its market cap to $220 trillion. In an Opto interview, Cathie Wood of ARK Invest discusses the transformative impact of technological advancements across multiple industries. She identifies 5 major platforms, including artificial intelligence and blockchain technology, that are bound to have significant growth and make us a lot of money in 2024. AI has the potential to boost productivity and earnings for businesses while creating new job opportunities in data analysis and automation. Similarly, blockchain technology can cut costs, streamline processes, and open up new investment avenues like cryptocurrencies and DeFi platforms, offering opportunities for wealth accumulation through investment and development in this growing industry. Wood predicts exponential productivity gains, particularly for knowledge workers, and highlights the potential for massive wealth creation. Let us now take a look at clips of Cathie Wood as she shares her expert insights regarding the impact of these innovative and disruptive technologies on various industries and how they can shape our financial future. As we share these clips, we'd appreciate your support by liking, commenting, and subscribing to our channel. Your support allows us to keep providing valuable updates on digital finance. We hope you enjoy the video.
It's five major platforms involving 14 different technologies. So multi-omic sequencing in the life science space, robotics, energy storage, artificial intelligence, and blockchain technology. So each of them is evolving, ready for prime time, ready to scale at growth rates that, depending on the technology, are anywhere from 20% to 50% per year. AI is a big catalyst here, and that's how we get to convergence. Each of these technologies leads to exponential growth, so sustained growth at a very strong rate. But think about the convergence of these technologies, these 5 major platforms. What you have is all of these S-curves feeding each other, which we think is going to create super exponential growth. And what that means, and what will be so unexpected here, is that already strong growth rates will accelerate and we think create massive productivity gains and opportunities for wealth creation. Artificial intelligence is a huge part of this. In fact, it is catalyzing the other technologies and accelerating them all. The biggest increase in productivity is in knowledge workers. We think there will be at least a 4-fold increase, probably more, during the next 6-7 years. And knowledge workers account for $13 trillion in wages and salaries. So think about that. The productivity, one person can do, 4 times more than he or she was able to do, a few years ago. We're already seeing this with coders. Coders, their productivity already at this very early stage is up anywhere from 50 to 100%. Technologies are inherently deflationary, but this is good deflation. They submit to learning curves, which we can measure in terms of costs coming down, and that's passed along in terms of prices. So this is good deflation. And it usually causes booms in unit growth. So all of those 5 platforms, we're going to see massive growth coming out of those. On the other side of that is going to be creative destruction. And what is that? It's really the disintermediation or the disruption of the traditional world order, which is really interesting because many investors now feel very comfortable in these large, broad-based indexes like MSCI World or S&P 500 or NASDAQ. But we think there's going to be a lot of disruption there and to the economy. So it'll feel a little chaotic. The sectors that are ripe for disruption include the entire transportation sector as we go to autonomous mobility, all of financial services as we move into blockchain technology, which is simply the internet financial system. It's the layer of the internet that developers forgot to put in the early 90s. So here it is. It's happening finally. And it's going to upend traditional financial services. Energy, with battery technology evolving as rapidly as it is, and the electrification of transportation, we think oil demand it has probably peaked and is on its way down. In the industrial world, we're going to see a massive increase in productivity because of robotics. We're getting to the point with robotics and humanoid robotics that a lot of the dangerous and really very boring jobs are going to be taken over by humanoid robots, and the sophistication that we're seeing there, again, thanks to AI, is remarkable, just remarkable.
Building on her discussion, Cathie Wood also stresses how Bitcoin is shaking up traditional finance. With Bitcoin ETFs getting the green light from regulators, Wood says it's time for financial advisors to consider Bitcoin as a legitimate investment option, regardless of their personal preferences. These ETFs could also affect the cryptocurrency exchange platform Coinbase, as these could both shake up revenue streams and provide financial opportunity. But as more people get into cryptocurrencies, it will be a win for everyone in the long run. The financial world is changing fast, and it's time to pay attention. Let us now view more clips of Cathie Wood as she explains her insights.
Yeah, a big wake-up call for the financial world in terms of Bitcoin was during the regional bank crisis last year, as the KRE, which is the regional bank index here in the United States, was absolutely imploding. When Silicon Valley Bank and others went under, Bitcoin increased 40%. And, many people who just refused to look at Bitcoin said, wait a minute, what? There's nothing like price action in a bad market, good price action in a bad market, to elicit the interest of investors who were poo-pooers before. And so that's what happened, because for the first time, Bitcoin became a risk-off asset in their eyes. They had only thought of it as a risk-on asset, very volatile, does well in bull markets. But this was a very loud signal. And I think the SEC signal, the green light with the ETFs, our spot ETF, ARKB is one of them, did get more and more people thinking about what you said, Ed. This is a new asset class. So advisor community, you may not like it inherently, but you must take a point of view and tell your clients why you're not including it, because the history of new asset classes is that when you put an allocation into one of these new asset classes, into your existing portfolio, the return per unit of risk goes up because of the diversification and the low correlation to other assets. And so a lot more advisors and investors are taking it seriously now. Yeah, we had already always assumed that the spreads, especially in the retail sector, which were very high for Coinbase, were going to come down dramatically because of the Bitcoin ETFs. We didn't know how low the fees would be on the Bitcoin ETFs, but nonetheless, that assumption is correct. Anything that gets more investors involved in the ecosystem is important. The ETFs are a stepping stone, for people who want to just get a toehold in. But as they learn more and more about Bitcoin, many will use this as a bridge into establishing their own wallets, which would be very helpful to Coinbase, so that they can participate more in other decentralized financial services. So we think this is going to be a feeder for Coinbase. Sure, there could be some revenue hits in some ways, but the approval of the ETFs, we think, will be a powerful boost longer term to pricing of all of these assets, which will be very good for Coinbase.
Right now, Coinbase is hugely benefiting from the growing interest in cryptocurrency. While trading is important for Coinbase, this also shows that more developers and maybe even banks are getting involved in blockchain. This could mean that Coinbase will offer more services like wallets, blockchain tools, and apps. This direction reflects the company's focus on service offerings and suggests it could become a disruptive force in the long run. Meanwhile, there's been a big increase in trading of spot Bitcoin ETFs, hitting a record high of $3.24 billion. This just means that more and more people are getting interested in Bitcoin exchange-traded funds, and it shows a notable shift in investor sentiment towards the cryptocurrency market. The rise in trading volume of spot Bitcoin ETFs indicates a supply shock within the Bitcoin market. A supply shock arises when there is a sudden shortage of supply compared to demand, resulting in significant price fluctuations. In this instance, the inflow of funds into spot Bitcoin ETFs exacerbates the supply shock, creating an imbalance in supply and demand dynamics. Recent market trends reveal that Bitcoin's price has reached $57,000 after almost 2 weeks, representing a gain of 9.62%. Notably, Bitcoin's upward movement occurred independently of the S&P 500, demonstrating its increasing detachment from conventional equities. In 2024, Bitcoin has performed better than both stocks and gold, achieving its highest ratio against gold in over 2 years. Large-scale buying by influential investors continues to be a significant factor in the Bitcoin market, with significant positions being accumulated. Do you agree with Cathie Wood and ARK Invest's predictions? Feel free to share your opinions in the comments section. If you found this video helpful, please give it a thumbs up and consider subscribing to our channel for more informative content on cryptocurrencies and finance. Thanks for tuning in, and we look forward to seeing you in our next video. As always, happy investing!